On September 2018, one headline sent shockwaves through the global financial system. U.S. authorities announced that one of Europe's largest banks had agreed to pay hundreds of millions of dollars over what investigators described as years of helping suspicious clients move dirty money across the world. But the most disturbing part wasn't the size of the penalty. It was the question everyone immediately began asking. If this could happen inside one of the world's biggest banks, how many criminal fortunes had quietly passed through the legitimate financial system without anyone noticing? This is the story of Danske Bank's Estonia branch, a scandal so enormous that investigators would eventually trace roughly 200 billion euros in suspicious transactions through a single small office in one of Europe's smallest countries. It wasn't a cartel hideout or a secret offshore island. It was an ordinary bank branch operating under the logo of one of Scandinavia's most respected financial institutions. To understand how something this unbelievable happened, you have to go back to 2007. Danske Bank, headquartered in Denmark, acquired the Finnish bank Sampo, inheriting its operations across the Baltic region, including a relatively small branch in Estonia. At first glance, there seemed to be nothing extraordinary about the acquisition. Estonia was growing rapidly after joining the European Union in 2004, and international banking opportunities appeared promising. Hidden inside that acquisition, however, was a customer base unlike almost anything seen elsewhere in European banking. These weren't typical Estonian families applying for mortgages or local businesses opening checking accounts. Many were non-resident customers, individuals and companies registered outside Estonia, particularly from Russia and other former Soviet republics. On paper, many appeared to be legitimate businesses. In reality, investigators later found that numerous accounts were linked to shell companies with opaque ownership structures and little evidence of real commercial activity. That distinction would become the center of one of the largest money laundering investigations in history. Money laundering sounds complicated, but the basic idea is surprisingly simple. Criminals earn money illegally through corruption, fraud, tax evasion, organized crime, or other offenses. That money can't easily be spent because its origins could expose the crime. So it is moved through layers of bank accounts, shell companies, and international transfers until its original source becomes almost impossible to trace. Banks are supposed to stop exactly this kind of activity. Financial institutions are required to know who their customers are, monitor unusual transactions, and report suspicious activity to regulators. These rules exist because banks serve as gatekeepers to the global financial system. Yet between roughly 2007 and 2015, enormous amounts of suspicious money continued flowing through Danske Bank's Estonia branch. Many transfers shared obvious warning signs. Companies with no visible business operations were moving tens or even hundreds of millions of dollars. Funds rapidly entered one account, crossed multiple borders, and disappeared into another jurisdiction. Corporate ownership was frequently hidden behind complex legal structures. In many cases, investigators later questioned whether the businesses involved existed for any genuine commercial purpose at all. And still, the money kept moving. By the early 2010s, concerns were beginning to surface inside the bank itself. Employees reportedly raised questions. External institutions flagged suspicious transactions. Regulators expressed growing concern. According to later investigations, warnings appeared repeatedly over several years. One of the most significant moments came in 2013 when a whistleblower inside Danske Bank alerted senior management to serious concerns regarding the Estonia operation. The allegations suggested failures in anti-money laundering controls and questioned whether high-risk clients were receiving proper scrutiny. The warning wasn't ignored entirely, but the problems were not fully resolved either. Years passed, the transactions continued. Outside observers saw a respected Nordic bank expanding internationally. Inside one small Baltic branch, investigators would later conclude that one of the largest suspicious money flows ever uncovered in European banking history had been taking place. Then the walls began closing in. Journalists from multiple countries started connecting pieces of a much larger puzzle. Investigative reports, including work associated with the Organized Crime and Corruption Project, revealed networks of shell companies allegedly tied to enormous cross-border money movements. International regulators increased pressure. Law enforcement agencies across Europe and the United States began examining whether parts of the global financial system had been exploited. In 2017 and 2018, independent investigations commissioned by Danske Bank painted an astonishing picture. Approximately 200 billion euros in transactions conducted through non-resident portfolios between 2007 and 2015 were identified as suspicious enough to warrant serious concern. Importantly, investigators did not conclude that every euro represented criminal proceeds. Rather, the scale of the suspicious activity demonstrated massive failures in anti-money laundering controls. The distinction matters. Suspicious transactions are not automatically criminal transactions, but when banks fail to verify customers, understand where funds originate, or properly investigate obvious warning signs, they create opportunities for illicit money to blend into the legitimate economy. The consequences were enormous. Danske Bank's chief executive resigned. Multiple executives left the company. Authorities in Denmark, Estonia, France, the United States, and other jurisdictions launched investigations. The scandal became an international symbol of regulatory failure in an increasingly interconnected financial world. Then came the financial penalties. In December 2022, Danske Bank agreed to plead guilty in the United States to bank fraud related to failures involving its anti-money laundering program at the Estonia branch. The bank agreed to forfeit approximately $2 billion and pay additional penalties as part of coordinated resolutions with U.S. and Danish authorities. The Department of Justice stated that the bank had misled U.S. banks about the effectiveness of its compliance controls, while high-risk transactions continued moving through the system. For one of Europe's oldest financial institutions, the damage went far beyond money. Reputation, once lost, is extraordinarily difficult to rebuild. Perhaps the most unsettling lesson isn't about one bank or one country. It's about how modern finance actually works. Every day, trillions of dollars move across borders in seconds. Legitimate businesses depend on that speed. Investors rely on it. Global trade would struggle without it. But the same infrastructure that powers the legal economy can also be exploited by those determined to hide wealth, evade sanctions, disguise corruption, or move criminal proceeds across continents. That is why compliance officers, suspicious activity reports, customer verification rules, and international cooperation exist. They rarely make headlines until they fail. The Danske Bank scandal also exposed another uncomfortable truth. Massive financial crimes rarely happen because of a single dramatic mistake. More often, they emerge from years of ignored warnings, weak oversight, fragmented regulation, and incentives that reward growth while underestimating risk. No single transfer worth billions triggered the collapse. It was millions of decisions, some careless, some insufficient, some inadequately challenged, that gradually created an environment where suspicious money could circulate through one of the world's most trusted financial systems. Today, governments continue strengthening anti-money laundering rules, banks invest billions in compliance technology, and regulators share information more aggressively than ever before. Yet experts acknowledge that the battle is far from over. Because wherever vast fortunes can be hidden, someone will always try. And somewhere behind the polished glass towers of global finance, investigators are still asking the same haunting question that emerged after the Danske Bank scandal became public. Not whether criminals will attempt to move dirty money through legitimate banks, but whether the next institution will recognize it before history repeats itself.